others. So I am delighted to be here. I almost had a medical emergency myself in running from Brooklyn Bridge stop to here, but I managed to make it. And I just want to introduce our guest, who actually, Ali, I know, who has actually just gotten a new job as an anchor at MSNBC. So congratulations, Ali, for that. I think that's fantastic. And Michael McDonough is on my left. Again, just met him, and he is the chief economist at Bloomberg Intelligence, and he oversees economics-related content on the Bloomberg Professional Service. So he's got a very wide scope and arc of knowledge, as does Ali. And at the other end is is Caleb Silver, who's the vice president of content for Investopedia, which has become really the go-to website for investor information since its 1999 launch. And I can't tell you how many times, I mean, I've been in this business for a long time, how many times I have to look terms up, and I immediately go to Investopedia. So he's got a lot to tell us about the searches that investors are making. So this was my first question that I wanted to ask all of you, and that is, given the angst that we are all feeling about this election, the market seems to be, you know, a calm in a sea of controversy. And my question to each of you is, why does the market seem to be handling all of this in stride and actually not being put off stride by this election? So why don't I start with you, Caleb?
Thank you.
Do you want to start, or do you want me to have
start.
Michael? Great.
I'll start. And thank you, Consuelo. Glad you made it. And thanks to the museum. Pleasure to be here and pleasure to be a sponsor. I think that there is some uncertainty, even though the polls tell you what they tell you, and people are kind of waiting for it to go to pass. I read a note this morning from Goldman Sachs that said, just wake us when it's over. And I think that's pretty much sums up what a lot of investors feel at this point. Market's still kind of relatively at highs. Stocks are making new highs, especially in sectors like tech. And there's no alternative, really, because that's the only place to really get yield. Stocks or emerging markets are starting to come back. So I think people are a little fatigued by it and are kind of waiting for the storm to pass. But there's been a lot of things going on in this past year where it seemed like the sky would be falling, like Brexit and like other major international issues. And nothing's happened. They've kind of been blips on the radar. The election would seem to be a bigger deal, but I think there's just been so much noise around the news that investors have kind of stepped back from the markets to kind of let it simmer a little bit.
So it's not an indication of their confidence in the outcome. It's just almost like investment exhaustion in some respects.
A little media exhaustion, a little investment exhaustion. Right. And I think that's kind of to be expected given what we've been through. And I think we're going to, as the gentleman before us said, there will be a lot to be seen after the fact, but it may take a few months.
Ali, what's your response as to why you don't think the markets are responding in the way that some of us are?
Well, I think there are two things. One is what we've learned since 9/11 and then through the recession is that the only thing that gets very, very big reactions from the market are things that seem catastrophic. So the idea that growth is going in a direction we don't want it to go, or that people stop lending each other money, none of which are circumstances that we're facing right now. Even terrorism, which remains an unknown, we see shorter acting responses from the market. As Caleb said, even Brexit didn't have the effect. But here's the thing that I think the two gentlemen before us, Jason and Nick, pointed out the ways in which a government can have an impact on the economy. Of those ways, very few of them are limited to are assigned to the executive branch, and we don't really know how that'll play out. So we don't know whether it's more likely to be a Hillary Clinton administration or a Donald Trump administration. One thing that these candidates haven't done, which is more typical of prior candidates, is give you a very comprehensive look at their economic plan. The plans in these cases have been aspirational. And at some point, particularly in Donald Trump's case, they become very hard to take seriously because he talked at the Economic Club about a 4% GDP growth rate, and he said that while his economic advisors don't like him to say this, he thinks it's going to be a lot more. And then in the last debate, he talked about 5 and 6% economic growth. And at that point, it's a bit like having a discussion with a child. You can't make decisions. You can't sort of determine how that's actually going to behave. So they've both talked about infrastructure. They've both talked about tax policy. But Hillary Clinton's tax policy, including her increases and her debt-free college plan, neither has any chance of getting through a Congress, and her debt-free plan requires states to be involved as well. So at some point, people like us who spend our time scoring these plans have nothing to score, and hence we have nothing to tell the audience. And unless you're a seer of some sort, you have no way of knowing what's going to happen. So what you have to do is, like Goldman Sachs says, you got to wait until it's done and then try and figure out what sort of regulation they'll have, what they're really going to do about taxes, what might actually happen. Nick, you talked about a budget. We don't see those very often. Be nice to see one and see what's involved in it, and whether Paul Ryan, and I think he's going to step up. I think Paul Ryan may end up being a bit of the hero of the next 4 years because he's seen every other play that hasn't worked, and now he's going to say, whoever you are in the White House, let's actually try and get something done. And then financial journalists can sit around and say, here's what the next 4 years are going to look like. But nobody's got any information to give anyone.
So, Michael, do you think that the markets are waiting and basically until it's over, and in fact that we shouldn't really worry about it until we know what to react to?
I'm going to try to empirically prove tonight why this is the case. I'm going to ask a question and raise your hand. I'm not asking who you want to win the election, but do you raise your hand if you think Hillary Clinton will win the election? Okay, so that is 90% of the audience probably just raised their hand. Well, let me tell you something. The University of Michigan puts together a consumer sentiment survey, which they release every month, and they've been asking that question, and about the same proportion of respondents have thought the same thing. And there's another interesting thing about everyone who just raised your hand. You, according to the University of Michigan data, have a much more optimistic outlook on the U.S. economy than the people who didn't raise their hand. So I think there's a lot of noise, but really what's happening is everyone believes they know who's going to win the election. It's not going to be that disruptive, so we're not seeing the reaction in the markets. And if you want me to follow on, do I think it's moving markets? No, I don't really think we're seeing a lot of movements in the markets. You know, when we were asked a while back, how do you measure the impact the election's having on assets? And the one thing that everyone looks at, they say, well, if Trump wins, it's going to be bad for the peso. You've probably seen these headlines, the debate's on, they have charts of the peso up. But in actuality, when you really look at the data, there's no causality. And how do we know this? Futures markets. You could compare the price of futures from September to October, October to November, November to December. So what you should see, if it is the election that's driving the peso, is a big change in the future of the peso from October to November. But it doesn't exist. Where the change does exist is between November and December. And what happens in December? It's the Fed. It's actually the Fed that's moving the peso, but so many headlines have, were published about what was happening with the peso that, maybe during the debate there's not a lot of liquidity at that time. You saw some movements, but in actuality we're not seeing much of a reaction in markets to the election.
So there are other indicators that all of you track as well where we are seeing some reactions. And Michael, you pay close attention to consumer sentiment, for instance. So what is that telling you as far as what the general sense in the public, among the public, might be towards the election?
So I started alluding to it with what I just said, but what you're finding is, so when you drill down a little bit more in the sentiment data, you look at a different survey, the people who have the largest incomes and tend to spend the most money, you've actually seen their confidence on a weekly basis. There's a weekly consumer confidence index that Bloomberg publishes that you could slice and dice 20 different ways. So the highest income earners have a shockingly strong correlation, their sentiment, towards Hillary's poll numbers. So we're at
optimistic.
Yeah. So as the spread, exactly. Okay. So a positive correlation with Hillary's poll numbers. So this is critical because right now the only thing driving the U.S. economy, and it will be for a while, is consumer spending. Eventually, hopefully, some other things will kick in. But anything that would reduce consumption, as in lower consumer confidence, could actually push the U.S. I'm not saying, Trump wins, the U.S. is going back into recession, but if it does hurt consumer confidence, it will reduce consumption, the growth rate will go down. So I think, the way the consumer is seeing it, Clinton victory is positive. We have higher expectations. The people who spend the most money are associating it with a positive outcome. So, that's if she wins, a positive. If she doesn't win, we'll have to see what happens, but...
And Caleb, what reactions are you getting from the Investopedia searches? And just explain how it works.
Sure.
Because so every time I do a search, this is the metadata thing. You're
Yes,
tracking
so
what I'm doing, and you're drawing conclusions from it, right?
For sure, and we're also creating content to make sure that we have what you're looking for.
Right.
So, briefly, many of you have probably wound up on Investopedia Googling a definition, a financial term, and for 16 years we've been putting those online. But we've also added a lot of content over the past few years, and one way we look at what content to add is through a special tool that tells us what are people looking for, which is more than what's trending, but where is search volume around key financial terms. So when we get a sense, and an overwhelming sense of key searches around certain terms or combinations of words, we know that there's a lot of interest there, obviously, and we write content to satisfy that search to help educate the audience. And our audience is super smart, and we've been tracking since the debates, the first debate through the last one, the volume and step changes in certain searches. And I'll tell you, the biggest increase we saw was for carried interest. Probably came after the second debate, where there was talk of repealing carried interest, which obviously
Right. People
hurts.
want to know, what is it?
They want to know what it is.
Yeah.
And so we saw a lot of search around that, and then we do articles about what the candidates' positions are around that. So there was a 318% jump, or 522% jump in searches just for carried interest. Other things that people were looking for: racketeering, depreciation, NAFTA, trickle-down theory. So as these terms were brought up during the debates, either as insults being hurled across the dais at each other in the debates, or as policy points, our audience is starting to look for those terms, and we get fascinated with knowing what you're looking for. And so there was that intense curiosity in the candidates' positions on that, in addition to other straight searches like, what are Donald Trump's chances of becoming president? How did he make his money?
And where do you get the answers to those questions?
How did he make his money?
Yeah, where do you get the answers to the questions like, what are his chances and how did he make his money?
So one of our most popular stories, and it's one we update all the time, are what are his chances? Now, we are taking data from 538. We're taking the betting odds in the overseas markets, where they're actually betting real money against this. We're taking some CNN polling data, probably some Bloomberg data. So we create a gumbo of other people's data and break that out for people to see, where the data is coming from. And so we don't actually put out our own number. We aggregate other people's numbers in the context of what's happening in the race.